just begun recording this. Obviously we can cut all of this up until the point where we go ahead. So what are you going to cover off?
I'll do the S&P, I'll do the NASDAQ, I'll do the Dow, and I'll do the Euro. I'm just trying to remember what the code is for the Euro.
That's all right.
I don't know what the code is for the Euro. Sorry.
That's okay. Which Euro is it?
Euro dollar.
Isn't it Euro USD? Or am I being thick? Is that? Do you mean Forex pairs or?
Yeah, it's on stock charts. It's totally different.
I'll give it a quick Google and see if I can find anything. X. Euro USD equals X.
What do you mean?
No. XUSD.
Yeah.
No, it's not called. But don't worry. What I'll do is I'll talk about the Euro without the chart. You might add in a chart yourself. So.
Okay. I see XEU. So dollar XEU semicolon dollar USD. Huh. Yeah, in EU, not quite working.
Yeah, here we are. Perfect.
Yeah.
Okay, so dollar XEU. Okay. Do that last then. That's perfect. Okay, so dollar XEU.
And is that still that's not measured against the dollar though, is it?
It is, yeah. That's it. That's it.
Okay, nice.
We're trading 118.40 now. Yeah, that's perfect.
Nice.
So that's fine.
Lovely.
Okay, that's perfect. Okay. Okay, let me know when you're ready, and I'll do a quick 5 minutes on this.
Okay, yeah. I mean, you do a quick intro of yourself. You know, hey, I'm Brian, whatever, Trader Noble, back again, something like that. But yeah, ready when you are.
Good morning, everybody. My name is Brian Noble, here to give you a quick weekly synopsis of the markets, especially after the volatility that we witnessed on the back end of last week ahead of the US Labour holiday weekend. As we all know, the technology stocks have absolutely surged over the past few months since the March 23rd low, got to severely overbought levels. And we finally saw a reaction to Apple and Tesla, which fell 20 and 26% respectively at the back end of the week. This led to a huge sell-off in the S&P, which hit an incredible high at 35.85 on early Thursday morning before falling to a low on Friday at 33.47. Of course, as we all know, with the central banks buying these markets aggressively since March, keep pumping liquidity into the system, they cannot afford to let these markets sell off and undo all their good work. And we saw a nice 100-point rally in the S&P on late Friday before a small sell-off on the close. The close at 34.26. The key level for the S&P going forward is the February previous all-time high at 33.90. As long as we can close above that, then the uptrend should resume. If we break 33.90 and close below there, it's very important to look at the close, because everything is the close is the key. As we saw on Friday, the low is 33.47, but we still bounce back above it. So I'm looking at this 33.90 level quite closely. If we break and close below there, then we should go down and test the 50-day moving average at 32.98. And history tells us with these markets, anytime you get a test of a very important support like the 50-day or the 200-day moving average, you always get a decent bounce first. So if we do break 33.90 and close below there, I would be an aggressive buyer in front of 3300 with a tight 32.80 stop. Fading the 32.98 level being broken over the coming weeks, then we will see huge support below here at 30.92, which is the 200-day moving average. So I'm still a buyer of dips on the S&P unless the key levels are broken. But bearing in mind, if we do break any key level, there will be buyers will come in, especially around the 50 and the 200-day moving average. Just switching over here to the NASDAQ. This is the NASDAQ 100. This has just been an incredible uptrend, as we see since the 23rd of March, when we bottomed at 6,700. We went all the way up to 12,500 in basically a straight line. Last Thursday and Friday was the first fall we've really seen since March, when the NASDAQ fell 10%, led by, as I mentioned, Arya, Telsa and Apple. On top of that, the NASDAQ was trading so far above its Bollinger Band that I had to have a retracement. And as we see on Friday, we stopped just above the 50-day moving average. It coincides with what I said in the S&P and on my previous slide, where any test of very important support always leads to a decent rebound first. The key here is how far can this rebound continue. I myself, given the sell-off, the aggressive sell-off of last week, I will be a seller of dips. Of rallies on the NASDAQ. My level today is to sell from 11,700 to 11,850 with 11,915 stop. So I'm quite tight on my stop. I still think there's a lot of margin calls and liquidations to come through after last week's sell-off. So I would expect any sell-offs from here to be met with strong resistance, and I'm quite comfortable to go short. As we saw on the Dow, switching over to the Dow, we saw a bit of rotation out of technology into the financial stocks. The financial stocks were helped by the bond yields backing up 8-9 basis points after the strong employment data on Friday. So we saw the Dow hit a low of 27,700 before bouncing, and in the overnight market today, now we're trading at just under 28,400 as we wait for the US markets to open this afternoon. The Dow, I think, is more constructive than the NASDAQ and the S&P, and the 50-day moving average is not too far away from current pricing at 27,100. I would be a very aggressive buyer the first time the Dow can dip down to that level. Resistance level for the Dow should be around the 28,600 after last week's sell-off. I'd be a small seller, kind of between 28.5 to 28.7 with an 850 stop. But bear in mind, I'm not as bearish of the Dow as I am of the NASDAQ and the S&P. And then just to go on to currencies, all eyes are on the ECB meeting on Thursday. We've seen a bit of verbal intervention by some of the ECB members, primarily Lane, saying that the euro is overdone over 120. You know, we've had a 13% move in the euro since the March 23rd low, back up to just above 120. So the ECB certainly don't want a strong euro. Everybody wants a weak currency to help it with growth. So I think if the euro can kind of close below this kind of 117.80 level, we should have a run down to the 116.5 area. Given the level of the move up from March, I would be an aggressive buyer in front of 116.50, looking for a retracement back up to 118 then, which should act as good resistance going forward. But we're bound to see, you know, certainly when Lagarde speaks at our press conference on Thursday afternoon, we should see some verbal intervention from her trying to talk the euro down. I'll be back next Tuesday for another look at the markets. Hope you enjoyed today.